Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Soybeans, corn, and cattle mostly higher on Monday. Jeff Hoogendoorn is in with analysis. And Jeff, we had a good day in soybeans on Monday, and that market seems to really be pinning its hopes on some China business. Is that what we're trading?
I think China headlines, there's a lot of different things that are helping push that bean market and kind of maybe carrying the corn along a little bit. Actually, fairly encouraged by the trade the past few days on both sides. So you got, back to the China situation. Yeah, we continue to increase our optimism that we might be able to get a deal done there. As crazy as this might sound, I felt like the bean market got a little strength as we were talking about the Argentina situation too. So, Argentina does import beans. Obviously, they get them mostly from Brazil. But last time we really struggled with trade, and we were able to ship a little bit of beans into that part of the world, for the Argentina crush facilities. So it just kind of felt like it gave it a little extra strength. So that might be in that marketplace just a smidgen.
Well, and with what they sold to China, they might come up short on beans for their crush facilities, don't you think?
Yeah, that'd be the theory. And do so between now and when they get their next harvest away, of course, which, they're doing a nice job getting things planted and things are happening down there.
Jeff, we've also seen better processor bids and better processor demand. Is that helping?
Yeah, I probably am a little bit more encouraged by that side of things than maybe the trade situation. We all know how quickly the trade can be reversed. We experienced that last weekend, a little over a week ago, back and forth there. So nothing solid to hang your hat on, but I like the internal fundamentals of this cash market. And the two things to look at there is the spread action is fairly optimistic. I don't know if I quite dare say bullish, but certainly not bearish. That spreads continue to tighten in the bean world and in the corn sector. And then really impressive changes here out east for the most part on soybean basis. So we've had some processors really motivating some people with some free DP. We've had some basis change 20 to almost 30 cents in less than a week. So kind of harvest got wrapped up and things got locked up pretty tight, and processors didn't quite have as much product around them as what they were hoping, the way it looks to me. And we'll see once that's started kind of in the Illinois-Iowa border and it's moving west, see if that continues to take place or not.
And Jeff, November soybeans closing above 1030. How encouraged are you? We got above that area of resistance at least.
Yeah, lots of moving averages and things like that. What we were able to break through for resistance today probably helped fuel the market just a little bit. And I think with some of the news that we're talking about and getting through some of those issues, sure would like to think that it would open that bean market up to challenge some of the highs that we saw here in the past 30 days or so. So if you put November beans into that 1047 area, another, 15, 16 cents higher, I think that's got some real possibility to it.
So corn up for a fifth day here during the gut set of harvest. So are corn futures just following soybeans, or is this the lower yields that we keep pricing in, do you think?
It is impressive to be up that many days right through the heart of harvest. Biggest week, I think, was last week. But I think there's enough stuff weighing on all these grains that everything's got to work together, Michelle, to keep the thing moving higher. So, yeah, I think you need beans to be going up to get corn to go up. You need corn to go up to maybe keep the beans rolling here for just a little bit. But I do think the trade has adjusted its yield expectations another leg lower throughout last week. I know some of your folks had some, was that 178, 179 type yields out there. I don't know if I can quite get down to those type of levels, but certainly in our camp, we've been lowering our yield expectations too. I mean, we kind of were always in that 184 type of number. As we look at what Iowa's doing and what Illinois is doing, I think you got to take those states down to 13 to maybe 17, 18 bushels than last year. So going to be well short of last year's record yields in those two states at least. It's really hard to get us a lot higher than 182 now. So I think that's kind of on the upper end. Maybe if it's hard to see where you got South Dakota, Nebraska, even Minnesota helping up that average some. It's hard to get us down into the 170s too far in my mind, but that's maybe your range, 178 to 182 here.
Got to be impressed with export inspections as well. It's the only information we're getting from the government, but I think like 52 million bushels on corn this morning. That's pretty solid.
Yeah, solid. You got you're out shipping mini soybeans, so you're pushing beans out to the West Coast, I think, or excuse me, pushing corn out to the West Coast pretty aggressively. Also moving quite a bit down to Mexico. So you're seeing some signals there. Obviously, we know they got feeder cattle stuck down there. Looks to me like they're starting to put some U.S. corn into them here and starting to feed them a little bit more aggressively.
We are approaching some of those resistance areas again on corn, though. Do you think we can get through those?
Oh, that's a tough assignment, especially this time of year, going through gut slot harvest. I think that's going to be hard. There, too, again, I'm kind of hoping with the help of beans, we can push up to, the very upper end of where we've been. I just don't know if we can get enough of a storyline together to get much higher than that.
Gotcha. Let's talk about the cattle market. We had the train wreck on Friday after the president announced he was going to have a plan to lower beef prices. We got a few details today, including that the U.S. government might buy Argentina beef. Did we rally just because that's not a game changer?
I think it's going to be hard to connect all those dots and make that a big game changer strictly from Argentina. Just not sure you can get enough volume to move. And then, if you do take the trim prices down, does that bleed over into the other primals? And then you got the whole issue of box beef primals go down. Does the cash market actually go down, right? So just there's a lot of steps that got to take place. In my mind, it's going to have to be something a little bit bigger than that. So maybe that's what the marketplace was looking at also today. But you got to respect the cash action last week, right? I mean, you had to pay up again second week in a row, even though you had all the help you could ask for on the futures side of this equation. Still had to pay a little bit better money week over week for cattle. In my mind, that's pretty optimistic, right? You had 2 weeks of above normal offtake of contracted cattle going into the plants, into the packing plants. So they kind of pulled that lever, and that wasn't enough to get them all the way through October. They had to come, the back half of the month here, and so far been bidding pretty aggressively. So whether that's that's not new information on, with Monday's trade either, but I wonder if kind of all put that together, we've taken enough money off there for the moment.
Yeah, that totally got overlooked, that $5 jump in the cash price on Friday. Boxes were also higher here at noon, and I wonder if the market feels like at least we've stabilized the beef market for the time being.
Yep. Well, and the true thing to be worried about there, as we all know, is, if you're a hedge fund manager or whatever, and have a few $100 million to be messing around with, do you look at this cattle thing and say, well, it's gone up an awful lot. We've made a lot of money. The administration's going to be fighting against me. I think I'll go find something else to do and move your money elsewhere. At the end of the day, that's the thing to be worried about, right? And that's going to affect this market in the biggest way.
Yeah, because we need the funds playing in here to keep this market at these lofty levels that we're at for sure. The other thing I wondered is, was there fear on Friday about the plan from the administration, including either lifting the Brazilian tariffs on beef imports or opening the border to Mexican feeder cattle? And we didn't get that news anyways.
Yeah, 100%. I'm sure that's what the marketplace is concerned about, especially the way those feeders continue to put a little extra pressure on the deferred contracts. I think that's all signaling that, we're putting a little bit of risk in here of opening the border. That too is a bit maybe more of a political situation. So it's very fluid, I guess I would argue. But it's going to take something bigger. And you're hitting on the big ones. Do do we take off some of the tariffs or all the tariffs in Brazil? Do you open the border? Those would have a better chance of really moving the needle on this cattle thing, bigger picture.
For sure. What about the hog market? The December contract, especially, I think hitting some 2-month lows here. And we've done a lot of technical damage there, but are we about done going down? Because you do have a big discount you're holding to the cash index anyways.
I think that's maybe one of the biggest fundamentals here at the moment is that discount. Index has got currently to where index is trading premium to where the December futures are. That's definitely a larger premium than normal. Pretty quiet as far as fundamentals go here. I think the supply situation, in my opinion, feels pretty comfortable right now. It's not like we've got a bunch of extra pigs, but we've got enough of them to kill just about 2.6 million a week, and that's pretty healthy flow of pigs going into the plants. So, I think watch the cutout pretty aggressively this week. If we're going to truly bottom that thing in this $102 to $103 area, you got to be pretty happy about that. That's continuing to show that we're probably getting a bit of an uptick in the demand side of things. But that would have to take several dollars off of it in my mind, and look pretty soft in order for these hog futures to trade at, trade themselves further away from where the index is currently at today, Michelle.
All right, thanks so much. That's Jeff Hoogendoorn with Professional Ag Marketing and Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win. Talk with your retailer or visit Brevant.com/win to get started.